Alrighty. Doc here from North America. Good morning, good afternoon, good evening. It is TGIM. Thank God it's Monday. Always glad to see the days come and go. So don't run away from them. What do we got going on today? There's NASCAD. I think we were looking at oil and oats or something like that. I was looking at oats. Or no, I know what it was. It was soybean oil and NASCAD combined together. I thought that was fascinating. All right. Let's drift over to... let's see, where are we drifting over to? Oh, yes, let's get the spreadsheet up there. There's a spreadsheet which documents... Boy, in a world where... what do we have it called? I'm trying to think of the name of it again. Fake news, right? So in a world where you have fake news, where, in other words, if they said yesterday or they said on Thursday that cable was going down, and then on Friday it goes up again, they don't talk about it. That's fake news. In other words, they just ignore it. They don't say, "Geez, we were wrong. Maybe this thing has more legs in it. Maybe it's going up. I don't know. Something like that. And so let's take a look at cable right from the beginning, and then we'll jump over to the euro. But what a great example of that this morning. I heard something crazy like CNN was being used in classrooms as a history tool. And I was like, my God, they can't even get like something that occurred 3 days ago right. How are they giving us anything that's correct like, 50 years ago or 3,000 years ago? And I thought to myself, they should have a spreadsheet like we have a spreadsheet up on the screen every day telling you that the consistency, the accuracy, or the lack of our work. And so, and then it's obviously it's recorded or memorialized through the internet, like YouTube and things like that for years and so forth. So, I mean, what's stopping, when they, how they say, oh, wait, we got to fact check it. Well, how do you fact check it? You really think about it. I thought to myself as I was taking a water break from working in my my little field there growing my vegetables, I thought to myself, how do you fact check accurately? No one claims they can figure a way. Well, we fact checked every day. Every day we're on the trading screen here. We do fact checking every day. We live and die by it every day. There's a fact check right there. The spreadsheet right there shows you our history. Whoop, if I can figure out how to get rid of that. And I don't want to upload anything to anywhere. Go away. Shoo. And, no, I don't want to do whatever that is either. And so there it is, our spreadsheet. Weekly buys. In other words, has it been going up for 10 weeks, as Doc has said 9 weeks ago, 8 weeks ago, 7 weeks ago, 6 weeks ago, 5 weeks ago, 4 weeks ago, 3 weeks ago, 2 weeks ago? I mean, really, is it really been going up? We could take a look at platinum and see. Or let's say the cable. Where's the cable at? Where's cable? Cable's 2 weeks now. Says that it's going up. We've been saying for 2 full weeks. This is the 3rd week starting today. That's why I say thank God for Monday. And so that is going to be a 3 at the end of the week if it's still above our number. That's right. We usually post the number on here on Mondays or Tuesdays, or if you ask for it, one of the 3. And there's your fact check. We should call this not spreadsheet, but fact check. Right there. There it is. Fact check. Every day by Doc about the markets. And I thought to myself, this all instigated as I was going out the door this morning, at sunrise to go work out in the field before the sun really got high, And here in the States, it's 8:35 a.m. in the morning. So Doc's been working for, 3 hours plus, doing some manual labor, out there doing his thing, cultivating and planting and so forth. And so, so I thought to myself, I'm talking to myself, got one of those devices on my head to cut out the sound from all the, the machine of the cultivating. And I was thinking, fact check. Our spreadsheet is really a fact check. And it's never hidden. Never hidden. It's on every webinar since the first day that we've been doing this. Since all the way back to whenever I started Dukascopy. So, it's been going on for years. And we fact check every day. Now, how many technical analysis people put a fact check up next to their work every day. I've been doing it for decades. And I've been doing Dukascopy since, I don't know, maybe 2012, something like that. So, there it is right there. There's a fact check every day on the screen. And as you can see, and we'll just dissect this one. See, here's another one right there. There is the euro against the dollar. It says that it's 3 weeks in a buy right there, and 9 days in a daily buy in our signal. So we're using two different signals there. We're using a longer trend, weekly trend, and we're looking at the daily trend. And we have rules written up if you're trying to figure out, exactly how this all works when you look at our Chicago quant trading tool. If I can figure where it's at. There it is right there. And this basically gives you the visual of it. And then what we do is we use J4X to confirm it. And we also have a couple tools we've invented or used, or public tools that anybody can get their hands on. Right there, these lines down at the bottom. And they correlate to my numbers pretty well. I would say about 65%, something like that. 70, that's pretty good. So anywhere in the low 60s is awful good when you got to figure that if you don't have my work, it's better to have this versus having nothing. And that's the way I always look at it all. So there hey, 54. No one, no one is crazy enough. That's right. That's what I'm saying there. That's right. That's my bad boy in me. Banging it out with the rest of the technicians. Matter of fact, we used to call this at the very beginning. We used to call it Algo Wars. I used to say, anybody wants to challenge it, cool. Bring on your work. Let's do it right here. Dukascopy was allowing me to have a very interesting open platform. And we used to call it Algo Wars. And it was like, we just want to see two algorithms battle it out. Just like WWW, like Worldwide Wrestling, And we had our spreadsheet there. No one seemed to want to battle with me. So I keep on offering and asking, anybody wants a battle, we'll battle. And we'll put your technical analysis up there with my technical analysis, or suggest one of those public technical analysis that we can get. We've done that before, like we did with the rate of change. Someone was telling me, oh, this is like rate of change. I said, I don't think so. And we put rate of change up there and we compared it to mine. And sure enough, rate of change did a pretty decent job. It followed mine very well, but it did not lead mine. Mine was ahead of it. So I call it Algo Wars. Nowadays, we just kind of just follow the spreadsheet and march along. Just rolling with the homies. There we go. So anyway, where did I leave off? Oh, yes, let's put the euro up on there. And there is the euro this morning. Zip-doo-dah. There it is. Euro is trading in the 112.95. I think it got up to did it get up to 114? It almost got to 114. You can see 113.83. Let's put it up on the Chicago Quant. Right there. It's been rolling. That's been in a buy from this point right here, or that low right there, the weekly buy. Went into a daily buy right there, and it's been. You can see green dots on there, and you can see the histogram is plus. The white line is plus. Yep. You see, hindsight is 20/20. No one wants to put himself on the spot, but you do it freely. Yes, that's because I'm the man. That's right. Used to do in battle. I'm a modern day gladiator. That's what we were in the trading pits, and before that, that's what we were as a young person, always battling it out. And right is not might. Right is just right. And when you're wrong, you go back and you go try to figure out why you're wrong and make it right. So Doc is that's it, I guess. Doc is it. I guess we could I'm thinking I've really got this wild idea about the idea of changing some of the names. I've licensed off my algorithm so we can have a website, Chicago Quant Technologies, And I'm thinking that we're going to change the name of the spreadsheet to fact check. People might actually understand that a little bit more than spreadsheet. So, I mean, that seems to make more sense. Fact, fact, F-A-C-T, fact check. That's right. We're the only technician out there that has a fact check sheet on the screen live every day. And so Doc is just, he's all jazzed. What can you say? My endorphins are flying. I've been talking to my plants. I've been cultivating. You know, it's that time of the year where I can grow lots of vegetables. You know, the greenhouse. I might go greenhouse again next year. It's hard to say. This year I got a big greenhouse complex. We've not really capitalized on it in years, and we used to trade out of it up in the trading shed, up in the what was it? Up in the potting shed. So, we'll come up with something there. I first started doing, I think, the Dukascopy from the trading from the. I think we probably aimed the camera out the window sometimes, and you could look out into the field and you could see the greenhouse, below, and the potting shed, so forth. Yeah. Anyway, let's get back to work. It's like everything in the market. It's what have you done for me lately? And that's the way the markets always have been, and that's the way the markets are always going to be. Yep. All right. So there's the euro this morning. You can see a little weakness trying to develop in there. When we go over to the quant, you can see the same thing. The white line has broken the time manifold itself. But nothing major is going on there. It's not like it's not like it's going to try to do something like this yet. And we'll see. We follow the math. We don't predict the future. We just follow the math. The math predicts the future. That's the amazing thing. All right, I myself just ride the dragon. All right, now let's jump over to where are we going to jump over to? Oh, let's jump over to, we did the cable, but I want to look at that cable just a little bit closer again. I think I was whining about 3 weeks in a weekly buy going on a fourth. That sure does look like an uptrend, doesn't it? From, was it 3 weeks ago? You think that looks like an uptrend? 108 to almost 114. So, you think that's an uptrend? I guess that's why we have a number on there, number 3. A whole 15 plus days of being in a buy. 3 full weeks, going on a fourth right now. All right, now let's, where do I drift to? Let's go back to the cable real quick. Right there. And they tried to take it back down, and they didn't do too good a job. It's jacked back up again. I think it went up to, did I put it in the wrong spot? I put it in the wrong spot. There you go. Right there, you can see it on the chart itself, on J4X there. It made another new high today. So Friday's high was, what was Friday's high? Friday's high was 127.30, almost 31. And then today's high was 120. Oh, no, isn't that amazing? Is that 127.29.4 versus 127. Okay, so it did retain its high, ran up to Friday's high and dropped a little bit there. You can see from the J4X chart, you got the solid line trying to break down. It's been curving. Now it's broken through the dashed, and you can see even the rate of change, which is close. It follows my math well, but so do these. Matter of fact, what's interesting is these who are considered lagging indicators, the way we use them, they become leading indicators, and you can see that the two different stochastics are showing some real clarity, where we're reaching a topping pattern, but it doesn't have to always top out. You can see when it did it over here, it did just a digestion and then back even to a newer high. So what we'll see is, I guess we could say, is we can see that the cable will probably march along a little bit more. Maybe this is the digestion, just like we're seeing it in the euro there. And then on Chicago Quant Tech, let's see, where is it at? Right there again. Yeah, same thing. You can see they're playing with the time manifold. Lots of green dots. This thing is zipping to the moon. Tightening up, though, the time manifold on the weekly. So we'll see what they do there. More than likely, when it tightens up, it contracts. The market starts to contract a little bit in there, and I say hopefully pound saw its high and coming down. The only thing I didn't like out of that whole sentence was hopefully. Don't tell me you're short this thing again in a weekly buy. You do have a good talent of catching the daily trend inside the weekly trend, but that word hopefully says to me that you already got a position on 54. And like I said, you've done a good job of trading the intraday around it, especially when you tie into the daily. If we're in a weekly buy and a daily sell, you've caught some good little downtrends and then you've gotten out of them. That's the good thing about U54 is to take a profit. That's an important thing. You got to take a profit when it's there. So we'll just wait for your answer to the word hopefully. All right, let's head over to Turkish lira. See what's going on with the Turkish lira, our dessert. I think it's 26 or 27 weeks now. 27 weeks. Look at that. Oh, and it's going still firm. It's firm. It's not rocketing. Heavily pound. You're heavily short. Ah! Why do you do that in a weekly buy? Ah! Every time I fight the math, I lose. I hate it, but I lose. So don't fight the math. Let's see. There's Turkish lira. 27 weeks now in a weekly buy. Let's take a look at that on J4X. Does that look like an uptrend since that white line there? I think that's an uptrend, right? Going from 5. Let's see. Let's put one of those cute little sideways lines. Oh no, I didn't mean it right there. Let's remove view. You know what? I'm going to leave that there. Let's go to this one down here. So 579. So would you say from 579 and a product goes up to, what is that, 720? Is that an uptrend? 726? Would you call that an uptrend? I would call that an uptrend. Yeah. Yeah, I think that's an uptrend. Okay. Started playing with the daily sells a lot there. Notice that? I mean, well, you can't notice that. Let's see if we can contract this a little bit more. No, that's not it. Let's put it up on the. Let's put it on the screen there first. Cha, yeah. Where that peak is. A lot of red dots. A lot of pressure in a sell. It was in a sell. It's been a daily buy for a few days here. I guess now, officially, it's rolling along with what? 1 day, 2 days. Where's that line? 17, 2 days. Right there. Guess what? Let's see. Fundamental. Oh, you and that fundamental stuff. Oh man, there have been more. I've said it on here. It sounds kind of racist. I won't say it again because it's an old trading. There's an old trading analogy. With the word like analogy. Analogy. You're Canadian. So like what it is that there's an old saying on Wall Street. And that is that more people have been killed, from doing that, following fundamentals than by Hitler. So, it's you're definitely fighting the dragon. Fundamentally, the dollar ought to be strong. It is strong. How much stronger can it be? If it gets any stronger, every time we walk with them in our pockets, we may levitate up into the air. The thing is so strong, it's like it's a rocket shot. The dollar is enormously strong. Can it go down a little bit? Can't somebody take a profit? It's got to go down a little. That's what I've been saying for like 5 weeks around here. We're going to go down. Titus, what's happening? Long time. Welcome back to the hood. Good to see you. Back to the hood. Yeah, I mean, the dollar needs to correct a little bit. I mean, it just has to correct a little bit. Give it a chance. Let it breathe. Who knows what the central banks dream of? The central banks have this philosophy, some type of channel and angles and channels and bases and resistance points. They have all these things they're running the world with. Remember, central banks now run the world. They run the currencies, they run the metals, they run the stocks, they run the bonds, they run it all. And so they're doing what bankers do, and that is they bank. They keep on doing things, moving money around, making things long and short, all kinds of stuff like that. So, I say it all the time. Quantitative trading and analysis is so much further ahead of fundamentals. It's not. Fundamentals are like, that's like 1975 before there were listed options. Now you're going to start getting me talking about options, which is going to scare some people. People are not going to want to hear about options. They're going to be terrified of options. They think they're some type of dirty word that does something evil. That's because a bunch of drunks created the names for them to begin with in the smoking room at the Chicago Board of Trade. And so that's where the first options exchange was. It was in the cloakroom where everybody went in to have a sip of whiskey, and when you weren't up on your clearinghouse where the whiskey was up there, you wanted to keep that buzz going. You'd go into the cloakroom and you'd have a swing of Coke or cigarettes or cigar or booze or something like that. Then they came up with the idea of, they were really going on psychedelics, and they thought, you know what, they just legalized options. Let's try options on equities. Here's a futures exchange. So the creators of options on stocks, right? The creator of a listed stock exchange of options was a futures exchange, the Chicago Board of Trade. Tell me if that's not crazy. You got to figure they must have been like, the stories I've been told, they were like crazy. I mean, crazy guys, coming up with the names, the calls and the puts and the straps and the straddles and all that stuff. I mean, they were inventing all kinds of wild ideas. And, sure enough, they had an equity exchange out of nowhere. That's right. They had an equity exchange. And before you know it, it was challenging the New York Stock Exchange for existence. Boom! Slam! Bam! Chicago Board of Trade, who always wanted to say they had the biggest tick, T-I-C-K, in trading. And they always, they'd all get liquored up, and we'd run across them at the Sign of the Trader or some other place, and they'd be Board of Trade traders, and we were CME traders. And we had a CBOT seat also, and which gave us the opportunity to trade the CBOE, the options exchange. So, yeah, and the end result is that fundamentals will cook you every time. Let's see. No, but lately, Doc, they are very expensive, particularly cable and options. Expensive relative to what? I'm listening. All I know is if Whirlpool's trading well beyond $40 a share, the whole world is expensive as far as I'm concerned. I mean, Whirlpool is like the run of the litter of like home appliances. Last time I looked at the stock, it did something. It was like something crazy, like $140 a share. Let's see. No, but lately, Doc, they are very expensive. Yeah, tell me about it. Things are crazy, but that's not going to, just because in physics we used to say, what goes up must come down unless it reaches escape velocity. Okay. So if it's taken off at 5 Gs or 4 Gs, and you fire it all the way up into low orbit and goes through low orbit and goes into outer space itself, it ain't coming back. Okay? Well, you're anticipating that the central banks are going to go away. In other words, when you say that they're expensive and fundamentals, you're insinuating, really, think about it. You're insinuating that we're going to lose the central banks. Now, you think the politicians are going to let the central banks go away? I don't think so, Lucy. Oh, no. Let's see. Buy puts on GBP, very costly. Do them in spreads. Let's go take a look at... All right. Now you've done it. Let's bring it down here. Let's go find... let's put the options up on the screen. Let's go take a look at the price. Okay, let's see. There's that. Let's go with the cable future. Oh, we don't even have to do that. We can just go like this. Okay. Now what we're gonna do is we're gonna minimize these guys a little bit just to not freak everything out. So we can bring this down. Oh, look at them. Evil things, calls and puts. Ooh. Let's see, can you see that? That's pretty good, right? Okay, now let's go find the product. Let's see. Where are you? There you are. There's cable. Okay. All they let us do is we do have options on cache, but they're hard to get to. They're owned by the CBOE now, and they're really hard to get to. But this is the futures. And let's see. Let's go there's 24 days back right there. So let's take a look. The product is trading at 126.70 on the futures contract there. All right. Now that's not exactly right because the July contract is probably the September contract is. Let's see if we can find the September contract. Let's see if we can find that. The September contract. Remember they trade them like that. We can try end of July. Yeah, we could look at the end of July, but it's based off of the July contract. So 6. What was that? 6B U 0. Trading at 126.75. Okay, so there's not much of a contango there. No premium really. Okay, so the product is trading just about like the cash is right now we're looking at. All right, so let's look at the 20. Let's look at the 25 puts right there. They're 129 at 133. Okay, every tick is $6.25. So it's a kind of a wide market, right? So you can see, it's like $30 wide. Doesn't mean you have to buy it at 134. It means you can bid 130 or 131, and maybe someone will sell to you. All right, but they're keeping the offers wide. Now, you go and sell the. Well, you could go sell the 124 put, buy the 125.5 put. That's 150 pips. You look, see it's moved down to 128 now. See, these things just move around just like the cash do. Cash is moving around. It'll move around too. And there's 124s. So that's 14. That's 14. That's and 28. What is that? 42. That's 42 pips, right? So to make 150 pips, you have to put out 42 pips. Now, that doesn't mean you're going to lose the 42 pips. I mean, you can lose it, no doubt about that. That's the most you can lose out of it. But you'll have more staying power because this goes on for 60 days. Okay. Now let's just take a look at it. If you're right, and it's going down fundamentally, and it's going to fall down, say, back to 123, right? You're thinking 123 or something like that. Where are you thinking? 123, 122? I don't know. What do you think over the next 60 days? You do that stuff better than I. You're always chasing after it. So let's say 200 pips. Okay. So now let's go take a look at with it trading at 126.5. Basically, it's trading at 126.70 at the moment. So let's look at the 126, 128 spread. All right. So that's basically, you look at the bid or the offer to offer, and you can figure your price. So that's 145 versus 38. So 160. 140. 140. I'm sorry. 164. 164 minus 238. Right? Just subtract them. It's basic add and subtract. So that's 36 and 38. So it's a 74, right? So what did I say the other one was at? 42 and 74. You could, for 42 pips, you can almost double your money by buying the put spread. Yeah. Okay, what do we got there? Yen. Oh, yes. Okay. So there, you could double your money with very low risk, with just a 42 pip risk, by just doing the put spread. And you got 60 days in it. And you're not fighting Doc too much. Doc's math, not me. You're not fighting the Chicago quant math. Okay. So, see the difference? Instead of just hammering out the hard delta, having a stop like it's 1975. You're following fundamentals like it's 1975 before the zero sum factor of all financial markets existed. See, that's what has wrecked fundamentals, is the zero sum factor being removed due to derivative options or derivatives in general. Just that has opened the game for people to trade long by actually selling short. Is that what? How do you like that one? Yeah, that's exactly what it is. My psychiatrist, my subconscious, basically spit that out on its own. So basically, the whole problem is ever since the listed options market in 1976, you have people who can sell short in front of you to get long. And fundamentals are telling, oh no, they're selling short, they must be bears. Wrong. Because you can be selling derivatives short that will make you long. So fundamentals are gone. They're history. They're like, bye-bye. They don't exist anymore, fundamentals, except for money managers who get paid to trade like it's 1975, and that's why you have crazy stock markets the way we had. I'm surprised that you know how they created a Federal Reserve. I think maybe if you wanted to get rid of the Federal Reserve, all right, you ready for this? Doc's having an epiphany right now. How many years have I said you're never going to get rid of the Federal Reserve? I just had an epiphany. If you force all investors to only trade, the derivatives, the options, and move away from the hard delta only as an issuance, you could probably get rid of the central banks, because the risk factor would be so dramatically lower. You wouldn't have had a February-March collapse of the markets. You would have had, everybody would have been hedged. There would have been no reason for them to sell the hard deltas. In other words, they would have been holding on to their stocks, collecting their dividend, just doing their thing. There would have been no reason for the selling. And so if you remove the reason for selling the issuances, stocks and bonds, they're issuances by companies to derive capital. If you drop the reason for people not to buy issuances, let me say that one more time. The Federal Reserve was created. Now I'm going to elongate this conversation. The Federal Reserve was created to be the lender of last resort because people were not willing to buy the underlying products, the issuances, stocks and bonds and so forth. Okay, so Woodrow Wilson, who was heading for this socialist thing, who was a socialist, thought if I can get rid of the private investors and bring in the government, in other words, government versus free enterprise, I can get rid of recessions. No more boom and bust. And that's what he was aiming for. Okay, and ever since they've created the Federal Reserve, we've had twice the amount of boom and bust. We had the crash of 89. We had I think we had a crash in 89 too. I think we had the crash of 87, and we had the crash of 29. Remember, Federal Reserve was there created in 1913, but somehow or another, 16 years later, we had the worst drop in the history of all financial markets. Again, where's the fact sheet? Where is the doc? Was it fake news fact sheet? What do they call it? Fake news fact check. Where was the fact check? No one seemed to want to fact check anything of that, did they? So, if you force investors to utilize options correctly, that's right. So in other words, if you're long stock, you must own a proportion of puts. And you can pay for the puts by selling calls. So you can do it for free. Okay? And then you hold on to the underlying assets. I'm waiting for the black helicopters to come wipe out my whole farm right now. I mean, honestly, I'm waiting for a meteor to fall out of the sky. This makes so much sense, I think I need to write about it. Oh my God, I think I've finally found the thing I'm looking for. I wanted to write something for stocks and commodities. I think this is it. We fact-checked the fact that ever since they created the Federal Reserve, we've had bigger recessions, and we've even had some incredibly ugly depressions. Every time the government creates a major bank that's supposed to take over for the private sector, the economy gets worse, not better. Okay, so if... Oh, I got to buy me a few more congressmen. I think I'm going to change the law. All right, so if... Look at that. They're even trying to hide our options right there. So there's an example right there. You want to be short? Go buy the 126 and a half, 126 and a half, 145 put spread or something like that, or 25 put spread for 40 some odd pips, and you'll make 110 pips. The worst you can do is lose your 40 pips. Chances are you won't, because after a while you'll get fed up being in a weekly buy, owning a put spread, and we'll be in a daily buy, and you'll be like, why am I fighting Doc's dragon? So I think I've come up with it. I got to remember this. So it's the endorphins from me working out in the field for a couple hours. My brain is running on high right now. I am like, shoo. My brain is thinking so hard that I'm like, I'm there. All right. Yeah. So that would be the whole idea. See, this is because I was doing Dukascopy webinar, having a question and answer session, which I do every day. And so we get into ideas, and it woke me up to a fact. Just basically pass a law to make people who own assets, hedge funds, anybody who's governed by the SEC, anybody, not private citizens. If you're a private citizen and you want to be stupid, you're allowed to be stupid, okay? But if you're a hedge fund and you don't have downside delta, then you are running against the law. And that would be where Wilson should have gone further, but at that time options were illegal. Listed options were illegal. Okay? So when they legalized listed options in 1976, basically, in the middle or the end of, I guess it was the fall of 75, something like that, the spring of 75, right before Congress was released. And so then the drunkards had nothing better to do at the Board of Trade but to get crazy and create an equity exchange. Think about that. So the futures guys created the horse and power and the full destruction of the equity market. That's what it came down to in the end result. Like the figure on Friday, it is ridiculous because traders do not search the details. Oh, you mean like the unemployment thing? Yeah. Dow goes up 1,000 points. Dow goes up and down 1,000 points like a drop of a hat nowadays. I mean, things have chilled, but on the downside, it's just going up now. But I mean, yeah, that's why Doc was screaming about, we got a V bottom, baby. It's a V bottom. That's what it's going to do. It's going to go back up where it left from. Now, it might be a little bit more on an angle. We've gone past the 5 weeks of going down, or 6 weeks. Let's go look at that. Let's move this out of the way. But there's your option strategy. There's your option strategy. Go put the put spread on, and you can hold on to that baby for 42 pips of worst case scenario. All right, now let's go to J4X. Let's take a look at it. Full blown. Let's go to S&P. Well, first we'll do the NASDAQ. Doc knew that was for sure. That was money in the bank. The Tech 100 right there. And we're going to go to a week. Well, you can see here. It didn't make it. The purest of V bottoms would have been the same perfect amount of time, which you can see obviously is like more like up in here and in between here. And so, now they wanted proof of opening, and that's what that is right there. The proof of the opening, and they're at all-time highs. Okay, now let's look at the S&P 500, which is going to be second as far as I was concerned. It's lagging the NASDAQ, of course, but you can see here it's hitting the bottom end of the range of the all-time highs, and it's gone very nicely up, like the NASDAQ did. And it's a sloppy-looking V bottom, but it's a V bottom like anything else. And then the next one would be the Dow Jones Industrial Average, the home of the oldest and bluest of the blue, the best of the best of all the companies in the United States. Whereas the S&P 500 is the home of the best 500 companies in the world. So it's really like a global index. And then the Tech 100 is the top 100 modern tech companies and evolving biotech companies and electrical and so forth, and networking and shopping technologies in the world, and that's what the Tech 100 is. And so you can see here, this is lifted beyond. This is the Dow, and it's just about. It's not as up to the lows of the all-time highs, but it's getting close to it. It needs to get up to 2,800. That's why we have our target of like 27,600, 27,800 area. We're figuring that. I do that too once in a while. I try to predict what it could be. Let's see. Hertz stock is now above the day they announced bankruptcy. There you go. So, told you then, don't bet against fundamentals. I mean, bet against fundamentals. Yeah, I've been saying to you, don't take it too serious. Wait till I'm going to buy me more congressmen. We're going to get that law changed. Any fund or entity that has to answer to the Securities Exchange Commission or the Commodities Futures Trading Commission should be forced by law to own puts. If they're long, and if they're short, they can own calls. Now, they can pay for them by selling other options, but they have to have a percentage of delta hedged on their long. Maybe 60%, maybe 70%, maybe 50%. If they have a legitimate 50% hedge, you don't get the crazy of February or March. We don't get 2,000 down day points in the Dow or 1,000 point down days in the Dow, because the volatility options traders who are selling volatility they'll have buyers. Those buyers will be the funds who have been running around naked with no pants on, just like the emperor with no clothes. And I did tell you that, right, 54? I told you, don't take the bankruptcy. It hurts, serious. I even said to you, buy more, don't sell it. But I think I finally answered the question. How to bring back more free markets, more capitalism to the markets. Because the central banks and the government have been irresponsible since they're lackeys and have no real care about marketplace at all. Instead, they're just a bunch of politicians hiring friends to put them into the CFTC and the Securities Exchange Commission and the Federal Communications Commission. They're just a bunch of lackeys. They don't know how to allow capitalism to flourish. The idea was to protect people. Well, protecting them is not by taking capitalism away. It's by increasing it and protecting it itself, making capitalism more functional. But, Doc, isn't it like football? Which football? English or American? You need to guess where the ball will be rather than run after the ball. Hmm. I think they do that in both of them. I like that. That's a good analogy. You got a really good analogy there. All right, so let's take a look at that. Uh, but Doc, isn't it like football? Okay, yeah, I agree. It is. It's like it. You need to guess where the ball will be rather than run after it. That's exactly right. So if you buy naked equity issuances, if you buy naked issuances, and you buy, bonds and stocks and whatever else there is out there, buy them naked. Soybeans, if you buy them naked, and you're an institution and you have that enormous power to screw up the world. And that's what screwed up the world. It wasn't private investors that made the Dow go up and down 1,000 points. It was funds. It was institutions. Oh, I'm sorry. I apologize to you, 54. Canadians football, CFL, or NFL? Because I have a good reason to mention that. I'm a connoisseur of both. Yeah, because I can tell you that is even a better analogy. Because remember, American football, you have 11 players on the field. Canadian football, you have 12. Canadian football, you can move forward. There's forward motion allowed behind the offensive line without the ball in motion. In U.S. football, the ball is static. It's more like rugby. It's the scrimmage line, whereas Canadian football kind of removes some of the characteristics of the scrimmage line. Okay, NFL. Okay. Well, my answer to that is yes. You are right. And that's what's missing, is that if you're a fund and you have, I don't know, 50 billion, or you're a pension fund or a hedge fund, or you're a municipal fund, protecting whatever, all these government funds, or quasi funds. They're not government, but what they're doing is they're investing for the government, teachers funds, things like that, retirement funds. And if you don't have, you're buying the issuance for dividend and growth. Okay? And so if you don't have over 50% of puts on, then what happens is that when there's a calamity, you don't know, you're like a deer in headlights, right? It's like that's what's great about Canadian football. You get all that forward motion going on before the ball snapped, and so that's like a tell of possibly what play is going on. And and then so somebody's moved out of your lane, or they have lanes in football, and people don't realize that they have unofficial lanes, or not, they're unofficial, they're official lanes, but their players are supposed to follow certain players in certain zones and lanes. And so when funds like that don't have any puts on, they have to panic. But if they realize something's going wrong, they can just go sell more calls and go 100% short calls, long puts when they're panicked. And then they're not going to be selling their underlying assets, the issuances. And so then what happens is, as the markets are going down, guess what happens now? Because you're long all those puts and you're long all that equity, be it stocks or bonds or soybeans or British pounds or whatever you are, you're long them. Guess what you need to do? You ready for this one? And the market's crashing. What you need to do is you need to sell puts. Yeah, not buy them. You need to sell them, the opposite side of the panic. So in other words, you're being forced to take a profit. Oh man, my endorphins are kicking today. I'm telling you, this particular webinar might be for historical moments. This might be the point in time where Doc changed civilization with, financial civilization, with coming up with a legitimate tool to straighten out the derivatives and the stock markets and the equity markets. Everything Woodrow Wilson was trying to do, except for he was trying to do it in a socialist way. He was trying to remove free enterprise from capitalism. He was trying to become, like a fascist type of thing. What do you call it? Crony capitalism more. So, that is, the socialist thing where they only allow one company or, to be in one sector. There's only one manufacturer of washing machines and one company that makes tires and so forth. Yes, this is the answer to the whole question. I've been mumbling this for decades and no one's paid attention. And now I've memorialized it. All because 54 was short when we're long. Yeah. Yeah. The math and the dragon's telling you to be long, and you're trying to fight it. And that's okay. Just go buy some put spreads. It's a cheap way to play the downside. And then, if you really rack up some dollars, let's say it goes to 122. Then what you do is then you buy the hard delta. So you buy the pound now. You buy the hard delta. You buy the pound, and you're long a put spread, and you sell the little putty that you buy back the little putty that you were short, but now you got the deep in the money, or you could roll it down even, and you have all that money locked in, and now you're playing with the market's money. There you go. Now I've come up with my resolution finally. I knew it was in my head somewhere. Now I can write my stock and commodities. And I've been thinking about this for weeks upon weeks upon weeks, and I haven't been able to verbalize it in my head, and now I have. I've verbalized this, so I can come back and listen to this a few times, and I can write my article. And this it should be cutting edge, I would imagine. I don't think anybody's come up with this idea before ever. I'm sure there's people who've thought it, but to actually document it in an equity stock and commodity leading magazine, that'll do it right there. Let's see, 54 says, that is what central banks are doing, buying equity and bonds. They don't need to. Let the funds do it. It is nationalization. Exactly. Companies, socialism. Exactly. So what you do is, if you're going to license people all the time to have funds, and they have to jump through hoops, you tell them that they're not allowed to not have insurance. They have to have puts on. And they have to be like 50% of the portfolio. Like the old days. 50% margin. And then they cannot hedge by being short volatility. See, that's what the problem is. You cannot hedge yourself by being short volatility, because when volatility explodes, you get what happened in February and March. You get 1,000-point moves in the Dow. Maybe we'll call it the DocDow law. I like that. I gotta buy me more congressmen. All right. Anyway, what time is it? Okay, we got a few more minutes. So exactly 54. That's exactly it. We remove the socialism. We remove the what was the other one? I like that. Central doing being the buyers and equity of bonds, the nationalizations of companies. Exactly. We remove those. How do we remove them? Make them be hedged. Because they claim, all these funds always say the same thing. Oh no, we're buying it for just the dividend and possible future growth. Well, there you go. That's no problem. That's easy peasy. Matter of fact, for the bond guys, it's even easier, because you got to figure most of these corporate bonds come with a call option right off. So they're long the debt and they're long the stock. And what they normally do is they go and they sell stock against the corporation, which seems to be a little illogical in many ways, because all you're doing is you're only long a call. So I mean, it's a synthetic short, and that's okay. And the money they get from the interest on the bond pays for the mistakes, but you're losing more of a return. But if you are long a call for free and you go sell another call underneath it, then I guess, above it. I'm sorry, above it. If you go sell a call above it, then the worst case scenario is you make money. And you keep all of the bond return instead of giving it up when you go in short stock. Yeah. Oh, this all makes plenty of sense. I knew it was in my head. I was trying to figure this out. I've been mumbling it for weeks upon weeks, and I kept on saying, I'm going to figure this out. I'm going to figure this out. I'm going to figure this out. There's no place like home. There's no place like home. There's no place like home. And I take my ruby slippers, and I click them 3 times, and before you know it, I'm back in Kansas. There you go. All right, anyway, this is Doc from North America. Today's title of the market is Central Banks, What Are They Good For? Or better yet, the Federal Reserve, what is it good for? That might even catch even more. that probably takes it even further. Nothing. That's exactly it. All right, this is Doc saying goodbye. We will catch you tomorrow, and we'll do the weekly numbers tomorrow. That's right. We'll do the weekly numbers tomorrow. So, ta-ta for now.